The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. And we've got a special guest today, folks. I met this young man, a couple months ago. I was watching a YouTube with our good friend Jim Bartolioni, and he was talking to this young man. And on this young man's T-shirt, it said, Mr. 1.618. And I said, we got to have this dude on. And folks, I'd like to introduce you to J.C. Parrots of All Star Charts. J.C., are you with us today?
I am. Thanks for having me, Larry.
Well, it's our pleasure, my friend. Show us what you're looking at today, my friend. Folks, this guy's got some great stuff, so follow through when he gives you the information because he does a good job. So go ahead. Tell us what you're looking at, my friend.
Well, I appreciate that a lot, Larry. Thank you. Listen, we have a great team of analysts in 6 different countries and all across North America. We all come together, and it's really a great bunch. So what you see out there is really a collection of all of the analysis that we're doing behind the scenes, not to mention all of the people that we're speaking to. Our customers range from, newer investors that are just getting going in the market to the biggest hedge funds you've ever heard of, and a lot of the major, most of the major banks you've ever heard of. So we're talking to all kinds of different people with different perspectives, and that's really what helps us identify the direction of primary trends. And that's what we do as technicians. That's why technical analysis works, because we know that markets trend. Returns don't fall under a normal distribution. This is not random. We know that. So for me, if you're not incorporating price behavior into your analysis, I think you're being incredibly irresponsible to your clients, to your family. How else are you going to manage risk? How else are you going to identify trends if you're not looking at price, Larry? What are people thinking?
I've always wondered that myself, my friend.
I know you and I see eye to eye. So what do you want to talk about? You want to talk about bonds? You want to talk about stocks, crypto, commodities?
Do you have any charts to show us today?
Well, are we sharing screens, or are we just describing these charts? What are we doing?
I think you can share a screen. I think all you have to do is just drop it into TFNN, and that should be able to do it. Would be my guess. If not, we could just chat this time, and then we'll do, I know your schedule's really tight today. So why don't we do this? Why don't we just talk a little bit about what you're seeing in let's take a look at the overall stock market today. Give us a little view on that, and maybe in a couple of weeks we'll have you back on, and you could have some charts for us to show you the different types of things, because you look at a lot of intermarket relationships that the folks are interested in, and I think they would like that. So why don't you tell us what you're looking at in the stock market now?
Sure. Listen, just broadly speaking, we've been in the camp that the market peaked in February, right? That's when things were the best they were, not just in the United States, but globally. That's when emerging markets peaked. That's when biotechnology stocks peaked. That's when the IPO index peaked. That is when the IBD 50, which is a bunch of growth stocks, peaked. That's when the advanced decline line on the NASDAQ peaked. That is when the new highs list peaked, all in February. That's when the SPACs, everybody had a new SPAC. Cryptos were going nuts. Like, everything was incredible in February, and that's the best that things were, and it's just been a deterioration ever since, pretty much across the board. Half of the NASDAQ components have lost 20% this year, and over 23% of the NASDAQ is down 50% this year. When you look at the average and median stocks on the New York Stock Exchange, down 20% this year, we've seen severe corrections underneath the surface that have been masked by some of the large cap indexes like the NASDAQ or the Dow Jones Industrial Average or the S&P, although the Dow Transports got hit pretty hard. Look at small caps look at micro caps, look at mid caps, look at the value line index that looks, much broadly speaking at the median stock move. And all of these index, what you'll find is that they've all gone sideways. They haven't done anything. But what I will say, and this has been going on, since February, and we're in October, so this is really the majority of 2021, most stocks have been in a correction. Sure, some stocks have done well, most have not. But one thing that I'd like to point out is you're not seeing an expansion in new lows either. So while we're not seeing any the new highs list is like, a desert right now, but there's the new low list is not expanding on any time frames, short-term time frames, intermediate, long-term time frames. And if we're not getting an expansion of stocks making new lows, it's very difficult for the markets overall to fall. And we're not seeing new lows internationally either. And those are some of the worst areas. So if the bears can't knock down the weakest areas, I think that speaks to 2021 being mostly a corrective year, building a base for another couple of years to the upside in terms of upside appreciation in stocks and in risk assets. How do you feel about that, Larry?
I think you're pretty much right on. How about the crude oil market, JC? What are you seeing there?
Listen, 76 was a big level. We were talking about, look at a lot of these oil stocks. The thing is with oil stocks is that these things have gotten destroyed. We're talking about companies that were like $100 billion companies, and now they're $2 billion. So nobody owns energy. Nobody owns commodities to the point where, and Larry, you and I seen a few cycles, the way we learned it was that there were 3 asset classes: stocks, bonds, and commodities. And the way the kids learned it these days, they forgot that commodities were even a thing. They think it's just stocks and bonds, or in this case, or maybe these days, stocks and JPEGs. But that's for another podcast. The bottom line is, if you're not exposed to commodities, you're missing out on serious alpha. What a lot of investors fail to realize is the S&P 500, as close to new all-time highs as it might be on an absolute basis, relative to the CRB index, is making new 52-week lows every week. So relative to commodities, the S&P 500 has been struggling big time for over a year and a half. So that's something important to remember. So, and when you look at the way the components, the different sectors are broken up, like the S&P 500 has less than a 3% weighting in energy. The NASDAQ has a 0% weighting in energy. So if you own these indexes, you have zero exposure practically to energy. And when you're seeing double-digit returns in a month for the energy as a sector, meaning 20% at the industry group and 30-40% moves at the stock level, and a name like Oxy Petroleum, or Occidental Petroleum trading warrants, I mean, you're getting massive leverage there. There's huge alpha to be made in the energy space, whether you use the leverage or not. It's already built in because it's the difference between moving a mountain, like some of these large cap mega growth names, or flicking a pebble, which is what a lot of these energy stocks have turned into. The ones that survived anyway, they're still super small relative, so they really move. And just investors, particularly in America, because in America, the home country bias out of American investors is out of control. It's a whole nother level.
We got to pay a few bills. Stay with us. We'll have you on for 5 more minutes, okay?
Sick. All right, cool.
We'll be right back, folks. JC Parents, All-Star Charts.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back with J.C. Parrots of All Star Charts. J.C., I'm going to let you go really quickly here, but I want to know a little bit about you. This is only the second time I've spoken to you, but Jim Bartolioni sure speaks very highly of you. How old are you, and what is your experience?
Well, I'm 39.
I got a cat 39. No, listen. No, I'm saying this because I am very, very impressed what I'm hearing for 20 minutes. I want to have you back on for a full hour pretty soon because you're very, very good at this. I don't care how many years experience you've got here, but at 39, I wish I would have been at your level at 39. I'm 81 now, and it's it's been a nice journey for me, and I really, really enjoyed it. But the fact that you're called Mr. 1.618 was the thing that amazed me the most. Bartolone and I we got a huge, huge laugh out of that ourselves because we've been fighting discovering this stuff for the past 50 years or so. But you've done a great job. I think tell us a little bit more about your background. I think it's important for us to know.
Yeah, well, listen, I appreciate that, and it's math that has helped me throughout my career tremendously. I mean, I look through 5,000 charts a week easily. I'd do it if I wasn't getting paid for it. I mean, this is just what I do. It's it's a fascinating market. It doesn't matter how smart or dumb or experienced you are. Everybody is in this market, and some of the smartest minds from Isaac Newton and all the names have all failed at this. It's not something that's easy to do. It's something that's incredibly humbling. It's taken me all over the world, India a bunch of times, Japan a whole bunch of times, Singapore and Hong Kong, London, Dublin, Amsterdam. I mean, it's just been such a blessing to travel throughout the world and meet new people and learn from traders and investors and analysts in all of these countries. And I'm Cuban from Miami, as different as I grew up than somebody in Mumbai or in Tokyo. The supply and demand dynamics, the fear and the greed that drive our decision making is exactly the same. And I've seen that firsthand. I promise you from the bottom of my heart, it doesn't matter how different us humans might grow up. When there's money on the line, our stress levels are elevated. We are going to revert to those evolutionary traits. And there is money to be made if you can exploit that for profit. And that's really what we do as technicians. We are taking advantage of the vulnerabilities of investors worldwide for our own gain. It's just an amazing. It's been an amazing journey.
Well, your journey is just getting started, buddy. Remember, trading is a journey. It's not a destination.
Let me tell you something.
Hey.
I don't take it for granted one bit. I learned a long time ago from a friend, Mike Bellafiore, that this is trading is not a right. It is a privilege, and you have to earn that seat every single day, and you have to live to fight another day. And most people are not able to do that. So it is definitely a privilege every day, Larry.
Good. All right, listen, we're going to let you go, and I'll set it up with you a little later. We'll have you on later in the month or probably later this month. But it's just great talking to you, and keep up the good work. And your fire is burning, buddy, so keep those coals alive, okay?
I appreciate it, Larry. Thanks for having me. See you soon.
You bet, folks. That's J.C. Parrott's of All-Star Charts. You can go into YouTube. He's got about 46,000 of them in there. I think you'll be able to see some of the work that he does. And he does a lot of he covers so much information. I thought it was interesting. Now, I posted a chart of Facebook up there, folks, and I kept telling everybody the last couple of weeks or so, this stock looks really bad with those little tiny 3-day rallies. And of course, we had a big break in Facebook today. We're probably so overbought that it's going to bring some people in, to start looking at it from the downside. But this is an overall bearish chart. Now, however bearish it wants to be, we'll have to wait and see. Now, I've also posted the chart of the NASDAQ up there. So I did the Facebook chart. I'm sure I did. Let me make sure that I did. Let's double check it again. Well, I posted it. Let's just do it again just so we have it, and then we'll be able to look at it. As a matter of fact, we're setting at the exact 78% retracement level right now. So those of you that might be bullish Facebook, this would be the spot. Hold on just one second here, and we'll get this up here and take a quick look at it. There we go. There's the Facebook. What we were talking about yesterday were those 4-day rallies. We had one back in September. I couldn't even make the 382. We had this one here just a few days ago. Couldn't make the 382. But what we have now is we're sitting right at the 78% level there at 318. So, and you can see the 1.618 expansion is at 313. So you're looking at about a $5 risk on a $300 and some stock. So if you wanted to buy Facebook, this is the time to buy it because, it's on sale. That's pretty much what we're looking at here. I know, getting off the track a little bit because somebody's already asked me another question. Jamie Dimon's on the tube telling everybody that, Facebook is worthless and everything. Well, there's $2 trillion out there that says maybe Jamie Dimon might be wrong, and maybe he might be right. That I don't know. All I know is the price structure is saying that this is not a bubble. I'll cover some of that. I've got some really, really interesting charts from the Elliott Wave Theory people that someone forwarded on me that we can look at some historical things to see it. But getting back to this Facebook right here, this is the spot right here. We're actually down $66, $67 from the high. So it's on sale today, folks. That's about all I can say. You can see the 3 drive to a top up there. Okay, it wasn't on sale up there at 385. Now it's on sale. So though the risk here is really small on Facebook, that's the bottom line. If I had to buy anything today, and I'm not, I would say that would be the thing I would be buying. Just by looking at that chart, it's sitting right at the 78% level. There's not a really clear 3 drive to a bottom pattern or anything, but the fact that it's right there, your risk is so darn small. It's right below the 1.618 expansion. That's how I would handle that if I were in Facebook. And believe me, I am not, and I'm not buying it. I'm just giving it as an idea. Okay, now let's talk just a little bit about the crude oil market, folks. We've been talking about the possibility of that high up there at 82. We went from 82 yesterday all the way down to 79.50. We dropped to $2.70 a barrel. That was the exact, to the tick, 78% retracement of the low of October the 9th. Now, all I'm saying to you here is after it hit that, folks, we rallied $2,000 up, and then we came down $1,700. We've had a $4,000 move in crude oil today. Now, this is how tops are made, folks. We've looked at that picture in the crude oil for it. We'll bring it up to you again. Let's get moving up here so we can take a look at it. But the fact that it hits those natural gas next, we can do that, Mr. Bo. You'll see here, we'll do that right after the break. But there's the 3 drive pattern up there. There's the first breakdown at the 78% level, the rally back. We're trading at 80.53. So far, as long as we don't clear above 81.80, this market has a tendency to be to the downside. But it's volatile out there, folks. I mean, in fact, they're all volatile. That's why we're, banging the drum. Focus on the what do you call it? The risk and not the other thing. So the reason why there's no video today, folks, is because something is wrong with my webcam. I'm trying to figure out what it is. It's a problem that I'm having with Skype, and hopefully I'll get it fixed here. There's a new download. Hey, we'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to take a look at natural gas. As you can see, we had a big top up there, and we've had this pretty big correction. That tells us we're probably going to go down and test the $5 level. We're trading at about $5.37 right now. But just for kicks and giggles, I wanted to share with you one of the things that I look at for trend reversals. And those of you that follow the 24/7 know that's what I look at. But if you'll take a look at this, this is the updated version of that. 1 second, because I put in what happened today. So far, we've gone up to 540, which is the exact 382 of yesterday's high. Now, folks, there's a possibility here. If we get above that, I'm talking about 540. If we get above 542, that could mean that we're in a pretty good bottoming in here, because we didn't make it to the 78.6. We're trading pretty much at the 61% retracement now. But if we get above that 382 level today, that would be the first sign, and during the whole thing here on the way down up from 650, that we've had a break of the 382. So that's what I'm looking at. If it gets above that level, I say, well, we got a shot to go long. But right now, the trading gods are saying, right now you're still in a downtrend. We'll revisit this tomorrow on the show, and tomorrow's guest will be Shane Smulyan. And so that'll be good to have. Anyway, let's move on here to the next one we want to cover here. We've got so many things going on here. 2 people have already asked me about the Facebook. Folks, I know about as much about stocks as I do cryptocurrencies, which isn't very much. I do know charts, and I know that if Facebook gets below 612 or whatever that number was, I can't even remember the price anymore. These things are so expensive, but because I've lost a chart already. But anyway, I think, it's 6. If it gets below 612, there's something wrong. So if you stop and think, you've got a stock here trading at roughly 618, right? 3% of $600 is $18. Well, I don't want to risk $18 on a trade, correct? So if I look at this, I cut that in half, that's $9. So if I buy it at 16, I risk $9 on it. That's a penny and a half or 1.5%. That is certainly acceptable in my book. So that's if I had to buy a stock today, that would be the one I bought. Now, we're going to look at that later, but that's one of the other things. The other thing we've got going on today is we've got this grain report that's coming due here in a half an hour. And look at your charts, folks. There's some really interesting ones. They've been hammering these grains for a long time. We've been saying that. We had a really nice move in that last soybean run, and we're watching them again. But these markets are giving up very, very quickly on some of these things. The only really bullish ones left in the commodity group, we had copper today. Copper hit the exact. Let's just get back to copper, because that's something that we need to be chatting about here. Here is the copper chart. If you want to look at a downtrend line, just 1 second here. Take a look at this. Look at the downtrend line from June, folks. That's a solid line. I mean, I never connected those dots. I just drew them in. Look at that. We hit it in April or May. We hit it in July. We hit it in September, and we hit it again today at the exact 786 at 440, and the high was 440.20. My goodness. This is how these technical things are set up. So, and that's a beautiful Gartley pattern, because it's a beautiful ABCD pattern. There's a few more bars in the CD leg, but it still fits perfectly. So it's a perfect Gartley, and so far it's worked. Now your stop would be at break even, and you let it rip. So that's the main thing that we're paying attention to with some of these things. So we'll take a look at this. Okay, hold on a second. Someone had a question. No, anybody have any questions? 877-927-6648. The real reason why I don't have the webcam today, folks, is I was in a poker tournament last night here in Tucson, Arizona. On Monday night, on one day a month, we have at the Indian Casino. There's about 100 guys that get together, and we buy in for $50, and we play Texas No Limit Hold'em. And I got down to the final table, and I was the chip leader. I had quite a few chips. And then I got hammered on a really, really good hand. I had the winning hand. The last card beat me. And the next hand, I had a pair of jacks, and I'm playing against the two best people on the table, and they put me all in, because I only had my original $2,000 buy-in only had like $800 left. Now that's $50 in cash, folks. So it's not a lot of money. So I have a pair of jacks. And both of those guys have a pair of aces, the two guys. I mean, just unbelievable. But guess what, boys and girls? The old jack hit the board, and the old cowboy walked out in second place, and I put $250 into the old charitable trust, And so I had a lot of fun, but that's why my webcam isn't working today. Tomorrow we'll get it working, but that's neither here nor there. Okay, now let's move on to something else. We've covered the copper. Let's go back to some of these things I wanted to show you about looking at Elliott wave stuff. Now, this is, I want to show you this, folks, because this is the stock market. I'm not making any predictions on any crash or anything like that. Crash business, I trade patterns. I don't trade crashes. Crashes happen every 2 or 3 generations, and my generation's out of business. What I want you to look at here is look at the low. You see number 3 there? You see the low that was there? Number 3 on the thing on the bottom there? That was the crash of October. It bottomed on the 11th of November. Okay, from the 11th of November, it rallied 4 months into the 1st of April. That's 0.4. Okay, and then it went down. And then it went all the way down to Basil Chapman's target at 41 in the Dow Jones. So how they do this and how they think they're doing with these is really interesting to look at. But here's the one that really interests me right here. If you'll take a look, this is what Mr. Prechter's prediction is of his idealized diagram of what the Dow Jones might be doing based on the Elliott wave analysis. I won't make a comment about this, but it's interesting. Okay, let's move on to the next one. I wouldn't have done that myself because nobody can predict it out. If that one works out, I'll probably start counting waves like the rest of the dudes, but not necessarily. Okay, the other one that was very important here is what's happening with the trend index. This is the way you look at advanced decline, the advancing issues over declining issues. This also comes from Elliott wave. That's why they got some great charts in there. And I think they do great work. I just can't count up to 5. I'm going to count to 3. Look at this. The similarity between where we are in the trend index and where we were in October of 1987 is very, very similar. So we got to keep that possibly in mind. So that's it. And then finally, I wanted to show the one that shows the South Sea Island bubble. Let's get this up here because this is nothing this cryptocurrency stuff looks nothing like the South Sea Island bubble. This is the one that bankrupted Sir Isaac Newton, okay, back in the 1700s. Of course, he made it all back when he became the Chancellor of the Exchequer in England for the first time. Anyway, this is a bubble. Okay, we're not seeing that with Bitcoin. Bitcoin has, it's corrected. It's had 80% corrections. But by golly, it's still, closer to the high than it is the low. It's certainly, to see what that means. I really don't know. But all I know is it doesn't look like a bubble. I don't know enough about it but I tell you one thing. I know somebody who does, and that's John Jameson. I listen to him. And the next time I do a trading day, which will be probably in November, I'm going to have John on, and we're going to do some trading into cryptocurrencies online. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart from Jim Bartolioni. You all know who he is. He's one of the 4 Top Gun pilots I was able to work with over the years. But anyway, this is a chart of the dollar versus the Japanese yen. By the way, Jim will be our guest on the 20th of October. Next Wednesday, he's going to be our guest. And that'll be fun because he really understands this stuff quite a bit. He's a great teacher, and he's very funny. You'll notice those 3 little pyramids there, folks. That's a 3 drive to a top pattern. It illustrates it very closely. You can see the symmetry that's there. We have this wide thrust now that we're seeing here with the markets getting really active. Dollar yen is getting to be, favorable to everybody, but we're getting really close up there. And we're not very far away. That's around just around 113.80, I believe, is where we are. So we have to watch this one very closely. He'll have this on, and he'll share it with us when we have him on next Wednesday. That'll be a week from tomorrow. But the other one that we've got to be patient with, and this is something that's going to happen in 17 minutes, is we've got this grain report coming out. So pay attention to some levels here. Go back and do your charts. Remember using the old T-shirt moniker from J.C. Parrott's, Mr. 1.618. Take a look at your January soybeans, and you'll see that we have some pretty good support down there at 12.05. That's 20 cents from where we are right now. We're down sharply already, so they're going to be looking for a very bearish report. But we'll watch that anyway. I didn't put any recommendations out that. And that's what we're paying very, very close attention to. Okay, now let's move on here. Maria, you asked a question about where are we on that chart. I didn't know which chart you were talking about, Maria. Can you want to tell me what that was we were looking at? I post so many of these just to keep our interest going, so we'll pay close attention to it. But back to the Facebook, I've got three instances of people asking about the Facebook, folks. You buy it at 6.18 and you stop it at 6.12. That's it. You're risking $6. That's less than 0.5%. Oh, the ideal diagram of the Dow. Yes. Okay. Let me get that up here. This and I'll tell you, when I saw that, I said, wow. I said, how can anybody try to go out that far? He's going out from 2021. He's looking at stuff that, wow. I mean, this is the most confusing thing I have ever seen in technical analysis. Maybe I'm wrong, but I really find that very, very confusing. But I keep it as simple as possible. It's AB equals CD in my book, and that's what I'm trying to look at. So whether that works that way or not, I have to wait and see. Crude oil's now down on the day after breaking another $1.50. So the odds favor that we've made a pretty significant high in that crude oil, folks. So I think it's worthy of taking a look at it from the short side. Also, as long as that natural gas does not get above 540, that's still in a downtrend with a price objective down around 515. Now, I wanted to share one other chart from one of our subscribers, and that is this really, really nice chart here on the E-mini S&P. Let's get this up here so we can see it. You'll see here that we've had this really nice 135 pattern coming down. Now the equal moves, you can see how perfect the green arrows, we're looking at those, how perfectly those arrows line up. That takes us down to an area here of around 423. This is the SPY. Yeah, this is the cash S&P. So that'd be 423. That would be somewhere around 4230 in the futures, and they're trading about 100 handles above that right now. So that's possible. Now, if we do get there, we're going to have a really nice 3 drive to a bottom pattern, and that's when you're really going to see what's going to happen next, because we know that when 3 drive to a bottom patterns fail, that is very, very, very bearish. So we need to watch this closely for sure. I'm just trying to keeping my eye on the monitor here at the to see where I can see a price of Facebook. Hasn't come up yet, so I'm not going to. Someone want to tell me what the last price of Facebook is, just so I can see where we are. Facebook. Is Facebook trading at 318 or 618? I can't remember looking at the chart. Maybe it is. I thought it was 320. It's 320. Yeah, the number was 318. 318 was the buy, and you put a stop at 312. That's it. That's all you can do. And remember, if you take 6%, yeah, that was right. 6%. Excuse me. 3% of Facebook would be $9. That would be too much to risk. So if you cut that in half, all you have to do is put your stop below, 318 to 312. You're risking $6. That's less than 2%. So I think that's a pretty good bet. But who knows? I guess a few people bought it since we were on air, but it might have been trading higher because I didn't know the exact price. I was just looking at what price was posted on this. Remember, tomorrow's guest will be Shane Smolene. He's got some good information about the Fed coming up. Stuff that they're doing right now in the markets that people are not expecting, so we'll take a look at it. So the range today, David has shown me, that is between 317.37 and 324. So that would probably mean that Facebook has made some type of a minor bottom in here, but we'll see what's going on. So that's another thing that we're paying close attention to. Let's get to the one that really means the most. I want to share with you. This is the 3 drive pattern that we're seeing in the XLE, folks. Now, this is the one that's gotten it's got almost as much news as the COVID thing, but look at the 3 drive pattern in the XL ETF for the energy complex. That is a perfect 3 drive pattern. Now, the one on the really large one there is a 3 drive also, but that goes back well over a year. But look where we are right now. In October, that is a perfect 3 drive, and not only that, it's started to work. It went from 57.75 to 56.36. As long as it doesn't get above 58, it's a 3 drive pattern. So there again, there's a possibility of something that could be affecting all of us if it does work. Now remember, nothing works all the time, and that's why you use stops, folks. That's the main thing to pay attention to. If you have any questions, it's 877-927-6648, but unfortunately, Al just alerted me that the lines are all lit up again, and we will not be able to do this. The other thing about the Treasury bond, folks, we are in a monster with a big M, monster bear market in Treasury bonds. If anything, and the Fed is going to be pushed to the metal on this because you can just look at the chart, folks. I've posted this thing many, many times, and we've broken down below all major support. And now we're having a one-day rally where we rallied one handle. We rallied 1 full point after this monster 3-day down move. So we should get a little more, maybe a little bit more of a bounce. But the Treasury bond market, just look at it. Look at the Treasury notes and Treasury bonds. They're incredibly weak. I mean, just I don't know how anybody could even be bullish on these darn things, but that's what makes it the bakery business so good. Some people like strawberry cake, some people like chocolate cake. So, but that note chart and that bond chart do not look very, very promising. We're going to take a little break here. We get back, we'll take any questions that you might have. 877-927-6648. And I wanted to remind, we have somebody special, I can't remember.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Okay, folks, I've been asked to go through this Facebook thing again here. Basically, all I was trying to show here is you'll see the very first 4-day rally that started back in September. Okay, we couldn't make a 382 retracement. Then we had a 4-day rally here just a few days ago, almost exactly the same size. It went from 340 to 356. It rallied $16, and then from October the 4th to October the 8th, it rallied what? $16, okay? Again, this one actually made the 382 off of the high from the 27th, and that's what gives you your bottom down here at 318, and that is a 78% retracement of the low from May 10th, okay? It's also a 50% retracement for the low way back in March. So this is a very important spot here. In whether it's going to pull the rest of the NASDAQ up or not, I don't know. All I can tell you is that's a pretty big move here, and all I know is if it goes below that number now, had you bought it there, I'd put a stop under the low of the day at 316.90, And that's how I would handle it. But that's what it looks like as we look at these markets here today, and they are very active. There's no question about it. We're seeing stuff that, we haven't seen in a very long time, and we're going to continue to see these things because volatility is here to stay, and it's going to be staying with us, for a very, very, very long time. So remind ourselves, folks, it's not a market of stocks, it's a stock market. So you got to find the ones that you like to trade, and that's the one you want to be taking a look at. Another one is the euro. Pay close attention to it, folks. We've looked at this thing through the eyes of the dollar index, and folks, we are within an eyelash, and I mean this sincerely, of an eyelash of something really big happening in foreign exchange. So keep your cards and letters coming in, and remember, it's not how much money you make, it's how much money you don't lose. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow with our guest, Mr. Shane Smolian, thewolftrader.com.